May profits be upon you. Good morning. I'm going to take a look at pound USD. We're on the weekly, right? What I've noticed is, we're moving bearishly since the May of 2021, right? We had a significant break of market structure here. All right, so we are bearish, right? But what I'm expecting is a pullback of sorts because of the break of market structure. You expect a return to impulse or a return to origin of some kind, right? After an impulse, you expect a correction. Now, I'm looking over here to the left. We can see that there was a fair value gap on the weekly here right before this order block. And those are the kind that you really like to see. You want to see in the imbalance before right up above or below a supply or demand zone, right? So we see that price came all the way down here to fill this fair value gap, but we have a rejection here. Is this the beginning? Is this the catalyst that'll start a pullback of sorts? Well, let's take a closer look at the price action. If we go down to the daily, what do we see? All right, we have a well-formed area here for supply, right? All right, and the first thing that jumps out at me is this structure here. All right, price accumulated orders here and then pop to the upside, right? All right, when price comes back down to this area, what are we expecting? We're expecting price to have some kind of reaction here. All right, so we have this area here, and we can see that it was a sell-off from here, where at this area before we were buying, right? We go below it. Do we expect some kind of reaction as we correct this impulse? Yeah, I'm expecting some kind of reaction in here. And this is why my eye is at this area. This is what I call a buy to sell wicks. All right, on the lower time frame, this is going to be a redistribution of price here, and it's an area that I always look to the left. Was there buying here before? That's the questions that run through my head. And we see that we have a fair value gap going into this area, what I call a buy to sell area, right? All right, but I'm going to keep my eye on this well-formed supply here that has an imbalance running up into it. So, the thing is, part of my criteria for a valid order block is I want to see is there an imbalance right before it or right below it? As price goes into it, does it have to fill a fair value gap, an imbalance? Is there something to rebalance? And is there liquidity? I want to see it generate liquidity, take that liquidity, fill an imbalance, and then hit the order block or the zone of supply or demand. All right, so let's go down to the 4 hour. I know I just said a lot, but you got to keep up. Why do I have two eyes here? I have no clue. One of those eyes is not like the other. Okay, all right, so this is what I'm watching on the 4 hour. All right, you see how a closer look at the price action here lets us know that there was some transactions going on here. Is price going to power through all this, take that liquidity? If it takes this liquidity here, if it comes up, takes these highs out, hunts those highs out, and takes the liquidity, then it's going to hit this. I'm assuming that it's going to return to this this order block, and we're going to get some downside action from here, right? But I'm thinking in these market conditions, that's a pretty tall ask. All right, the market conditions are such that USD is gaining strength because of the war, and the pound is weak against it. But as you can tell by all of this bearish action since the time Russia invaded, right? We have a break of market structure here. I'm expecting some kind of pullback. All right. Does it have to go all the way back up here? No, it can go right to this area here. And this is where I want to take I want to keep my eye and watch for reactions like this here. All right. But I don't want to jump into a short because, you know, you want to make sure that you have some confirmations before you do. I'm going down to the 1 hour, and you can see as price came down here, you can see, let me use an aid here. All right. You can see that price made this low, broke that low. This is the lowest point. All right. So when it breaks that low, I'm looking for the swing point, the swing high that caused the high that caused that low. Right. And that would be here. Since that low was made, all right, and then price didn't break its own low with the next candle, this is the one I'm going to observe, right? And then you look for the highest point before this break. You look for the highest point before that break happens. That would be here, right? And the fact of the matter is, this is just an early sign that price is changing character, that we are switching, shifting from bearish momentum to bullish momentum. All right, that's, you know, they call it a change of character. You can call it whatever you want. It's a break of substructure. All right, and when you get a break of substructure, you're looking for a return to impulse, and you're looking for that low to be maintained. All right, this is the order block, right? But I can refine that down to here, and you can see it was maintained. It was hit once, twice. This was mitigated 3 times. All right, and then we finally get liftoff. Now it becomes very important to note we are breaking highs along the way. All right, and where exactly would you say we broke structure? I would say here, not because this arrow is there, but I would say this would, for me, would be a break of structure on this on the 1 hour time frame. All right, but we have broken, we've chalked here. All right, we've changed character here. We see price breaking these highs. I'm looking for price to pull down, pull back, and then quite possibly potentially going higher. Now, where would it pull down to? We'll get down to the just remember, this is a higher time frame fair value gap that I believe price will close. All right, because there is liquidity here. The top of these wicks, there's people who took shorts to take these take price down, right? So this not only represents a break of structure, but it also represents liquidity. All right, we have liquidity up here, and we have liquidity up here. Is price going to go climb up here and take this liquidity out and then fill in this higher time frame fair value gap? It could happen. There's potential for it. So right now, my focus is on this area here. So I'm looking for a long entry. This is counter trend, right? Counter to the larger trend. But I believe because price found its support here, found its footing, I believe that it may go up from here. Now, I'm looking here. I'm looking at this potential area. I'm looking at this potential area for price. Why is this green? Yeah, it's supposed to be green. All right. I'm looking for this potential area for price to come down. Price may not make it down here because there's the gap, the imbalance was already filled. We see that we have rejections from this area. But I'm going to keep my eye on it, right? I'm going to keep my eye on it because we broke these highs here. We broke this substructure here, and we could get a pullback that could take price below these lows. This is, you see that liquidity was taken from this low here, all right? We swept that low. Could price come lower? Yes, it could. And what I'm looking for in this leg of structure, this impulse leg, what I'm looking for is a possible pullback point, an order block that is unmitigated. All right. And what I'm seeing, what I'm seeing is this right here. The problem is the order block starts here. The order block starts here. All right. There are equal lows here. This is why I'm attracted to this area. There are equal lows here, right? That price will want to seek out. And there is a chance that price could come down and then continue up. Now, I'm also keeping my mind open to the fact that price could just start falling from here because of the market conditions, what's going on with the war and everything, and the strengthening of the US dollar. So it could resume its bearish movement at any point. All right, it's already taken out some liquidity, you know, as an impulse up here. It doesn't have to go all the way up here to seek that liquidity or fill this imbalance, this higher time frame imbalance. You can't be married. You can't stay married to the bias that you bring to the charts. All right. So because you can put yourself into trouble. All right. You got to be open. You got to be flexible and read what price is giving you. You got to react. You have to react. So I'm going to be reactive here. I'm going to look to see if price is going to come lower. If it comes here, if it does this, I'm going to do that. You understand? That's the way you got to think. If it comes here, I'm going to do that. If it doesn't come here, if it does something else, I'll have a plan in place. All right. I can't get rid of these things for some reason. All right. So we're going to be ready. We're going to be ready for it. When price opens up in 6 minutes, when the US session, or commonly known as the New York session, starts, you know, I'm going to be ready for price to dive and then pop up, or just continue to dive. All right. If it decides to go up from here, because it's already swept, this low to get to this point, we may see price continue up. I am flexible here, but I'm looking to see if price sets up a good entry. I'm not just going to jump in. All right. So I'm hoping that you benefit from this. You know, be flexible. Be flexible. I think price will go up. That's what I'm thinking. All right. Just looking to see what would be the turning point, if it's already in one, or if it's going to come down after a break of structure, whether it's microstructure or major structure. This isn't major structure. This is you know, the substructure, but it's still a structural point. It shows intent. It shows intent that price wants to go higher. All right. So I'm looking for price to either pull back into here and give me a, you know, a low, a pullback, a lower low, a high that breaks that swing point here. And then somewhere in this structure, price returns, finds an order block or demand, and then continues higher. I'm looking for that to happen here or here. Okay. I hope you benefit from this. I'll see you in the next video.